Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Thursday, March 27th. Gonna go through the usual tickers with you guys, but I also wanted to follow up on GameStop as well as NEO. Both of them seem to have been announcing a dilution over the past couple days, or really, I guess, between yesterday and today. And so I wanted to go over that. But first, as usual, let's dive into the UVIX. This is, of course, the 2X Long VIX Futures ETF, which closed yesterday at a price of $31.34, being up about 6% on the day and continuing up a little bit more in the pre-market. And yeah, we can see a nice little green candle there. Excuse me. And I am wondering if we actually have put in the bottom here on March 25th, so just a couple days ago on Tuesday, hit a low on the day of 28.67. I had this alert here placed at $28. We nearly got there, but didn't just yet. Maybe we do, maybe we don't before we start to, head up again, whether that would be another over 100% move like we saw over here, or if that would be just to getting up to these levels here, which you can see this purple downtrend, which we have broken above multiple times, and then also this downtrending parallel channel that you can see there. And so either one of those that we would get to would be some notable upside from yesterday's close. Even just getting to this gap here, that's about a 6.5% move to the upside. If we get to that purple line, it's about 26%. And if we get up to that light blue downtrend, it's over 30% to the upside. So, I think that the UVIX is a really nice way to hedge, especially when there's talk about tariffs, whether that's on, autos from, 25% tariff from foreign cars or, other. I think that can spark some volatility in the markets. And so I do think the UVIX is a nice way to hedge. I was personally waiting for this alert to go off at 20 to 28 to consider establishing or reestablishing a position in this, but that may not get hit. We will have to see. I do think that it would be nice to be holding some UVIX over the weekend, because who knows about the what news might come out over the weekend. But today's Thursday, tomorrow's Friday, so we'll assess that then, or really after the close on Friday would maybe be the best time to do that. But anyways, moving on to the VIX. This is the Market Volatility Index. Going to be very similar to the UVIX, except this one is options, so need to be trading with expiration dates and premiums that can go to zero, whereas the UVIX does not. But yeah, so with the VIX here, did close yesterday at a price of $18.33, being up 6.88%. So being, up more than the UVIX, but, being pretty similar in, chart pattern and stuff there, potentially forming a bottom here, but also, still being in this downtrend. So we might still be seeing some lows with this. And one thing that I always forget to do when talking about the UVIX is look at the volume, because it does not appear with the VIX. We did see an increase in volume on this up move, so maybe that is suggesting that the bottom is in, that we are seeing, the RSI start to go higher. And then also, let's see if we do look at the MACD. A couple days ago, it was getting more negative. So between between Monday and Tuesday, it was getting more negative. But then between Tuesday and Wednesday, it's gotten less negative. So maybe that is suggesting the bottom is in, and we can, see that over here as well. So the VIX did hit a low yesterday, not on Tuesday, but on Wednesday, a low of $16.97, being notably lower than $20 here. So yeah, I think that both of these could be a nice way to hedge. But personally, as I always say, I like the UVIX more than the VIX. Then anyways, moving on to the SPY. So this is the S&P 500 tracking ETF. Did close yesterday at $568.59, being down over 1% on the day, about 1.2%, and continuing, a few cents, about 30 cents lower in the pre-market. We do have this gap down here around $563.98, which would be corresponding with the gap here in the UVIX. And so, yeah, is the SPY going to be heading down to around $564 to fill that gap before continuing higher, or are we going to start to see a more notable pullback? So yeah, I think that this will probably be kind of a short-term pullback to around 564 before turning around. I do think that we could be seeing some all-time highs, and I did share a video on the channel, and I can actually just pull that up in case you're not familiar. So if I do just go over to the channels page, go over to the post tab, we can see some videos that I posted yesterday. This is one from Fundstrat, which is Tom Lee's fund, and he was talking about how there is a lot of dry powder on the side. Apparently, he goes over some data that would suggest that we're kind of positioned for a nice V-shaped recovery, whether that's with Tesla, the SPY, whatever. I think it's a good time to chill, not panic. And yeah, so with that being said, I do think that the UVIX could be going lower, but maybe we do see, with the SPY over here, maybe we see continuation down here and then up like that, which could be getting to, like I said, all-time highs, which would be above $600. It looks like the all-time high for the SPY was $611.39. So we'll have to wait and see if that does happen. If it does not, though, we do have, let's see, this level around 560. Maybe we pull back to that, and that does look like it was this double top over here. And maybe that more properly acts as support, as we did break below it over here when we hit the lows on, let's see, March 13th of sub $550, also kind of marked there by that 1618 Fibonacci retracement here based on these moves here. So yeah, I would look for, potentially forming a bottom around 564. And if there are no bottoming signs there, then around 560 or maybe a little bit lower. And before I flip over to the SPX, should consider the volume here. And does look like volume has gone up some. So I do think, yeah, heading down to at least 564 it seems likely, because with this downside move, we do see an uptick in volume, and the MACD does seem like it's kind of flattening out, might be rolling over along with the RSI, suggesting that the bottom is not in just yet. But then let's flip over now to the SPX. This is the S&P 500 index. Closed yesterday at $5,712.20, being down again like the SPY, over 1%. And it does look like we have effectively this gap here at, let's see, $5,667.56, matching pretty nicely with this light blue line here, which of course does correspond with the approximate double top over here. So yeah, I look for a pullback to around, let's say, 5,665, and then maybe we get a bounce, potentially getting back to all-time highs, which would be above $6,000. Looks like that all-time high was at $6,147.43, but I do think we might get some resistance, some notable resistance around $5,865, as that was some support over here, approximate support, before we did break down. And let's see, do I have that marked over here in the SPY? Yes, that is at around $582 or so. But anyways, let's continue on to Bitcoin, now trading below $87,000. And it does look like, we got, a little bit of a maybe breakout above this green downtrend. But really, it just looks like, with that level being kind of approximate. And let's see, maybe I do adjust this to the highs over here. No, I don't know. Maybe, yeah, it's how to get that to be exactly lined up there. Maybe I could just line it up with the two highs from here. No, I mean, yeah, that's kind of a tough one. But if I do have it based on the, let's see, all-time high Bitcoin around 109,000, and then getting to the close from February 21st. This is also charted in Webull, where the opens and closes are a little bit wonky. I think they are based on, I'm not sure if they're exactly what time zone they're on, but it might be East Coast. But anyways, with this trading above 87,000, we do have the CME gap down to around 84,000. Still has not yet been filled. So I could see that getting filled at this point, which would be, pullback like that. Maybe that would correspond to just following that green downtrend. So maybe we see something like that before we start to go higher. And from current price, what kind of a move to the downside is that? That's about a 3% move there going down. So maybe that's a nice way to make a little bit of money on this to the downside. And the way to be doing that, or at least the way that I am aware of doing that, would be with BITI. This is ticker symbol BITI, might be BIT for Bitcoin, and then I for inverse. This is ProShare short Bitcoin, which did close yesterday at $25.06, being up almost 2% on the day. And so let's see, where is that CME gap going to be associated with? So that would be effectively like the close from March 21st. So let's look over at that. And so that would be March 21st? Yeah. And so we can actually see, let's see. Yeah, we do have like this gap over here that's kind of over the weekend. So that actually makes sense. So the 21st here, let's look at the close. And this, yeah, might be a good way to kind of track that CME gap. And so that is going to be based on the closing price from the 21st, which was, let's see, 25.90. Have that marked there just right. And I'm going to make that actually red, so we know it's a CME gap. I might make that thicker just because I don't have a lot of lines up here. And so from current price, what kind of move would that be? That would be, again, yeah, like a 3% move. So nothing too crazy. So that would turn, $100 into $103. So maybe that's significant. Maybe that's not. I am not really sure. But yeah, I mean, that's what we are looking at with this. And so we might be seeing, a move somewhat like that. Because I do think that Bitcoin will ultimately be going higher, which would mean that BITI will be going lower. But also, maybe I should note, what kind of move that would be from the lows over here, filling that CME gap. That would be over a 5%, almost a 6% move to the upside. So yeah, I mean, turning $100 into $106. So not that crazy, but maybe this is just, a nice thing to try and be trading over, based on, the CME gaps when they are formed. With the week nearly being over, could be seeing some downside soon. Actually, I'll just leave that doodle up there. And then now quickly, let's flip over to Ethereum, still above 2,000, and we are respecting this yellow uptrend, which on the weekly goes back to the lows over here, going back to the lows from March of 2020. Also do have this green uptrend here based on the pivot high from June of 2019 and the pivot low from June of 2022. Does look like with that we could be seeing some more downside to around $1,400 or $1,500. But if I do flip this over to the log scale, that actually looks like it's acting as support. So I think that 2,000, or if we do break below it, if we do head down to 14 or 1,500, I think that's just going to be excellent dip buying opportunities, because if we do kind of extend this, or we do have this cross up here, that would be suggesting a price target of around $16,000 to $17,000. So a very big move to the upside. And actually, let's just kind of get the measurement from the move here to the highs from over here. That was, let's see, a 24,000% move to the upside. And so with that being considered, let's just get a measurement over here from where about we are at to up here. That's around an 800% move to the upside. So yeah, I mean, that doesn't seem terribly insane. So yeah, but that is of course looking at the log scale, and this was over the course of 57 weeks or around a year, whereas this would be over the course of like 3 months. So very different in that sense. But I guess, another thing that we could do is kind of take the measurement from the low here to the high here. And that is a move of around 5,000%. That's over the course of like 2 years. So yeah, we are looking at kind of different time frames. So definitely something to consider with that. But I do think that there's a lot of upside potential with Ethereum. So, I am liking it, but also, being patient, slowly DCAing. But anyways, let's now flip over to URA, ticker symbol URA. This is the Global X Uranium ETF, which does look like it is now below $24.50, which is the 786 retracement from over here. But still, we are putting in higher lows if we do consider, all these lows over here, although this is maybe kind of changing the trend over here. But yeah, I mean, the lows from March 13th were around 23.29. So yeah, maybe I'd want to draw a trend line over here or a ray. Yeah, potentially maybe broke below that. So it would be nice to see a close above 24.50 today. And that is actually about where we are trading now in the pre-market, around 24.49. But we did close yesterday, like I said, at 24.29, down about 2.33% on the day. But yeah, generally, I think, just stair steps up. And with this pullback, that does represent an even better move to fill that gap, which would now be around a 25% move to the upside. Whether you're trading URA or Oklo, I did cover that recently. That did pull down to 26, so I was happy to add another share to my very small position. But yeah, just kind of chilling with that one. But anyways, let's look over at GameStop. Did have a really nice move up to a high of 29.80 yesterday on the 26th, on Wednesday. But it does look like it got rejected from this prior high here that we hit on February 14th. So got a Valentine's Day high of $28.97. We actually opened and closed below that level. And so, yeah, that does look like, spinning top, almost a doji, if you were to really take a big step back with the big wicks to the upside and downside. But yeah, I do have that candle in the middle there. And so that does kind of suggest we might be seeing a little bit of a reversal. I had talked about, a pullback to around 27, and I can actually adjust this Fibonacci retracement to that high that we hit yesterday, which was 29.80. So I'm just going to adjust this by 10 cents there, so that does match. And let's see if we do pull back from there to, let's say, the 50% or the 618, that the 50% would be a pullback to around 25.67, whereas the 618, which would be a pullback to around 24.70, and it would also correspond very nicely with, let's see, this gap fill that we have here that is at $24.75. And so, yeah, I mean, if we do pull back to around 25, let's say, or maybe even lower, that would still be putting in higher lows relative to this low here that we saw, 21.56, hit on March 13th. That date is, commonly occurring in this stream. And so, I do think that was a notable kind of bottom there. We don't want to be seeing us taking out those lows. But if we do pull back, I think that's really just going to be dip buying opportunities because, Yeah, I mean, this is all just about GameStop announcing that they will be adding Bitcoin to their treasuries. And so that's why we saw the bounce yesterday. But then why we're seeing the pullback in the pre market and actually the after hours yesterday, getting a little bit ahead of myself. So with GameStop did close yesterday on Wednesday, March 26th at a price of 28.36, being up over 11.5% on the day. But like I said, in the pre-market, in the after hours from yesterday, pulling back notably, coming down about 9%. So it looks like trading in the pre-market around $25.80. Do have that 50% retracement mark there at 25.67. And so that is, yeah, I mean, right where we're at now. So this little bounce that I was talking about did kind of happen yesterday in the market hours with the low of 27.32. So coming down to about 27. But yeah, I mean, we are currently testing this 50% retracement. And I do think that we could, this is weird. Why do I have... I'm going to delete this one because it's looking confusing there. We do have the 618, like I said, at 24.70. So I would look for a dip to that level. And, good to be, not getting too ahead of ourselves. I probably should have talked about that being, resistance. And that would have been a good level, in all honesty, to take some profits to then add back, on this pullback. I didn't do that. I've just been holding shares. I haven't been buying, not even over here. I've just been chilling. So good to be considering that. But this does come on the news of GameStop following in MicroStrategy's footsteps. Why will investors buy convertible notes with no interest? And so that is going to be to then buy Bitcoin. And then with that being said, maybe I want to pull up MicroStrategy because then which is now strategy, I should say, because, what have they been doing? They've been going up a lot, and then we can just kind of compare that with the GameStop chart. So, a very different look. And then, MicroStrategy effectively looks like it's putting in this bull flag here. And so GameStop might be doing that as well, just getting a little bit of a retest here. So yeah, around 25 down to 24. I think that's going to be dip buying territory. So I think good to be patient with it, good to be chilling. But this was apparently a level to trim at. I kind of wish I would have trimmed up there, but and also I think too that people were probably expecting this to hit 30, and that didn't happen. So it was kind of a tease there with the high of 29.80. So yeah, I guess I will redraw the doodle that I had up there, and that would be coming back to here before going higher. And I think that could be going notably higher, like getting back to these highs of 34.40, getting back into the mid 30s and potentially up to the 40s, maybe to fill this gap here at 48.70. But that would be a longer time frame, so good to be patient with that. But yeah, now I'm going to switch over to, and so NIO here, looking at the daily chart, we can see that it closed yesterday on Wednesday, March 26th at a price of $4.22, being down about 3.87%, almost 4% on the day. But in the pre-market, coming down below $4 a share. So we'll look at the 10-minute time frame in just a minute. But I did want to point out that I was hoping that this uptrend would be holding as support. That was based on the lows from, February 11th, and then the open from March 4th, but we did break below that yesterday, and I was looking at the chart last night thinking, well, we have broken below that level. We did fill this gap here at 424, but I don't think that this trend line is going to be holding because we are, like I said, trading below $4 a share. Last night when I did see this gap filled, I did notice, hey, but maybe we are forming this uptrend here based on the low from January 13th and the open from February 12th. But again, I think that is not going to be holding. We are below this alert that I had placed last night at 410 because, like I have said, we are trading below $4 a share, which is taking out this low over here. So that is pretty disappointing. That is pretty discouraging. I will leave that uptrend here just in case, because maybe this is a pretty big dip to the downside and we do get a bounce. But let's see, let's look over at the 10-minute time frame to see this breakdown. Yeah, below that alert, below that gap fill. And so, yeah, where is this heading? We did hit a low in the pre-market of $3.88. And so what stands out to me as being somewhat encouraging is that we do have this light blue downtrend that we could be testing as support, retesting that. We did kind of, get a test of it over here, but, not quite. And let's see. That would be coming down to, let's see, if we just come down straight to that level, that would be getting to around, let's see, $3.70. So 20 cents lower to go. And maybe I should note where we are at currently. The cursor is right around 390. So this is about where we're trading now. But let's see, I would look for, I'm trying to, think about levels that might have some confluence that we might be pulling back to. And so I'm just going to delete this uptrend because unfortunately that is not going to be holding. And this gap fill, it has been filled. I don't think that's going to be too notable. And I did mention, let's see, $3 and maybe 70 cents being a good dip by level. I'll just make it 369. So I'm going to have an alert there. And that could be corresponding with a retest of that downtrend, retracing to the scene of the crime, this breakout before moving higher. But that's just really discouraging. But one thing that might act as some hope, and I might actually draw this blind to see where this takes us. And so we do have the low over here of 363, which was a higher low from the low of 361. And this was the low from April 22nd of last year. And this low over here being from August 8th of last year as well. And so I'm just going to draw this blind, going from that low of 361 to the low here of 363. Just going to make sure those levels are marked right. And I am going to make that line thick, and I am going to make it green because I think that would represent a dip buying level if we do pull back to it. And hey, look at that. That corresponds with potentially this downtrend, with possibly lows that we'll be seeing today once the market opens in about 23 minutes, as I am recording this live during the pre-market. But that is some hope that we could be coming down to there. And let's see, this is going to be discouraging because it's going to be notably lower, but just thinking maybe I could draw a Fibonacci extension from the high here to the low here, see where that takes us. I'm pretty sure that's going to be notably lower than 369. Yeah, 179. I don't think that's going to be happening. I think that, 370. I think this is really just, in all honesty, and just thinking about my psychology, I'm so tired of stocks. I'm so tired of all of these things, of, thinking that, hey, we're going to be breaking out. This is going to be going higher, and it just never happens. And now we're taking out the lows here, going back sub $4 a share. I'm just so tired of it. I'm so tired of it. And I think this is, effectively a time where people say, I am done with the stocks. I'm done with NIO. I'm going to take my losses and I'm going to walk away. I think that is going to be, the last dip buying opportunity before we see this take off, potentially up to 8. But I am clearly biased. I want it to be going up. I don't want it to be going down. But we are still respecting these lows. And so I guess, I have this alert here at 369. I should put an alert, another one at, let's see, add this here at 363. Because if we maybe I should do it actually. Yeah, 363. If that does go off and we hit a lower low than we hit over here, which was 363, if we hit 362, then this kind of invalidates that. But then again, it could also be kind of a shakeout. The weak hands, if we do hit 362, sweeping the lows, if we hit 360, then close, let's say above 363, maybe that's then putting in a bottom. And so what I am hoping, and this is all hope, is that we see, a quick takeout of the lows here, and then we go higher. And this is probably going to be, actually, I was expecting that arrow to look wonky, but it held the form that I drew. So let's hope that's a good sign that this is what is going to be happening. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. And so I will be releasing that as a clip, but I will open up the chat. I just had it closed here, so it's not distracting me, just to check up on the comments. So Alan is saying, CEO, CFO, confidence just report the worst since 2008. And I think that could be corresponding with, what Tom Lee is talking about, that there are, a lot of, signals suggesting that there's actually potentially a bottom coming in when, sentiment is just across the board as bad as it can be. That's potentially a dip buying opportunity. And so that's kind of what he talks about this. It's a 9-minute video talking about his, fund strat that you can buy shares in. It's ticker symbol. It's Granny Shot, so ticker symbol GRNY if you're interested in that. But I just think that he has a really great perspective. I think it's a good time to chill and to not be worrying about, the worst since 2008. I do think that we're potentially seeing bottoming signals, but with NIO, yeah, it's a little bit frustrating. And then also Disclosure Crypto is saying, hey, buddy, thoughts on MAPMS by Keris Dex. I'm not too familiar with that one, and since the market is going to be opening up in about 15 minutes, I'm not going to dive into it. But as far as crypto goes, I am really not paying too close attention to the lower cap cryptos or the alts or the memes or whatever they are, but just really thinking about Bitcoin. I think that this is on the weekly. I think that, this could be coming down to 75, 72, or maybe 69. And when it does come down to those levels, that is when I would think it would be time to go heavier on, ones that are more fundamentally sound, like Bitcoin or Ethereum. And then once those positions are better, formed, then to maybe speculate on other ones. And also PMS. Yeah, because I don't know exactly what ticker I would be looking for on that. So I'm just going to end the stream there. And thanks guys for hanging out. I'll be doing this again tomorrow for Friday. Trying to start a little bit earlier. I just got off work a little bit late, so feeling a little bit tired. But anyways, I hope you guys have a great start to the day. Hopefully we start to see, some bottoms forming before we do take off, whether that's Bitcoin or stocks. But anyways, thanks for hanging out, and I'll see you guys later.